What's up, guys? Welcome to the Momentum Trading Lab. Please remember to hit that like and subscribe, and let's get into it. All right, so let's have a look at the price action for today and review what we had going on in the Discord this morning. So this morning we said on the daily chart we dipped into the weekly fair value gap, and we also swept the relative equal lows on the daily, and maybe we expand towards the previous day high. I see for some reason though there was a problem with the chart link that I sent this morning, but let's go to the daily chart. Right, so this is what I was referring to. So yesterday we came into this weekly busy fair value gap, so buy side imbalance, sell side inefficiency, and then on the daily chart, if we look to the left, we had these relative equal lows. So this is retail support, and then as you can see they just dipped into it, knocked out all of these stops, and then reversed it back to the upside. All right, so the draw on liquidity this morning we knew was kind of to the upside according to the daily and the weekly chart. So let's quickly see what happens. So quickly go back to the Discord. And we also had the high impact news at 8:30. All right, so the open was right here at 9:30. Let's mark that off. So right before we had the open, the sell side liquidity was visible below these lows. So these are relative equal lows, and below relative equal lows we know that there is sell side liquidity. Then right at the open it had a little bit of a move to the upside, so that was kind of your little to the swing. Then a move down into the liquidity, knocked out all of these sell stops, and then started to displace to the upside. And then remove this line. So we had displacement to the upside. That also gave us the bullish market structure shift. So it took out the very last higher low, which was this one right here, displaced above it. The displacement is defined by the fair value gap that it leaves. So you can choose where you want to enter in which discount PD array. So let's put a Fibonacci on this, and I know somebody in Danny's stream this morning pointed out that this bounced right off the Fibonacci 786. Right, so you had the fair value gap in the discount zone. This was basically the midpoint of the fair value gap, was right at the equilibrium. Then you had the OTE right there, the 706, and then we had a bullish order block. So I just entered right at the fair value gap. I'm willing to absorb the risk, and then according to the rules that we discussed yesterday, your stop will go below this low. So according to the three candle pattern, which gives you the fair value gap, your stop goes below the low of the first candle. So this basically gave us everything on the checklist to open a long position. So the first one is a move into liquidity. So that was the sell side liquidity. Then displacement to the upside, that creates a bullish market structure shift. We had the displacement with the fair value gap, so then we just wait for price to get back into a discount. So you could have picked between the fair value gap, the bullish order block, or the OTE for this entry. And then like we said earlier today, that the target was towards the previous day high, and this was the setup that I gave this morning. So we had the sell side liquidity, we came into it, displaced to the upside, bullish market structure shift above that high, and then as you can see we came into it. I took some serious drawdown at some point, and then it expanded to the upside, and I just closed the entire position right there. So I just basically try and target the low hanging fruit, and then look for the next potential setup. So that was a pretty nice trade from the fair value gap to that first high was 53 points, and then it went all the way. I think this was a 1 hour fair value gap for a total of 225 points. If you had a runner in this trade, that would have been pretty awesome. So yeah, so it went straight to the fair value gap on the 1 hour chart. And then also this light gray box that I have, this is the new day opening gap. Let's go to a smaller time frame. And then what you need to do is to see the new day opening gap is go here at the bottom corner and select regular trading hours. And then you'll notice that we have this gap right here. So this was at the end of the regular trading hours. And then the lower end of the gap is at the start of the trading hours. So 10 past 4 and 9:30. So that is your new day opening gap. As you can see, it went straight to it. Didn't close above it. You can see how the candle bodies are respecting that level. So that also gave confluence that the draw on liquidity is going to be to the upside. And see, here we also had one. And see how accurately they fold that one as well. So let's quickly fill in that gap. So for the new day opening gap, you pull it from the close to the open. And see how accurately the candle bodies respected that high end of the new day opening gap. Okay, let me just remove some of these things off the chart. It's getting a little crazy on the chart. So as you can see, we had multiple indications pointing to the fact that we are going to see higher prices on the Nasdaq. The reason for that was all of the imbalances to the upside, the previous day high, the fact that we came from sell side liquidity, daily sell side liquidity, and then also on the smaller term time frames, we had the raid of the sell side right here, displacement to the upside, and then that 200 point move to the upside. So that was a pretty decent play for the AM session. I'm very happy with the session this morning. It went pretty good. And then just let me fix the midnight opening price. Do you use New York time for this? Okay, right there. So also the fact that price came below the midnight opening price. So if you are bullish, then you want to be looking for longs below the midnight opening price. And if you notice that the draw on liquidity is to the downside on the higher term time frames, then you want to be looking for short positions above the midnight opening price. And this is according to New York time, so Eastern Standard Time, UTC -4. All right, so that's the little review for this morning. The afternoon session is about to start in 2 minutes. All right, so let's have a look at the higher term time frames. I'm just going to remove all of this. Yeah, let's have a look at the daily. Still some stuff on the smaller time frames. Okay, so like I mentioned this morning, we came from the daily chart sell side liquidity. We also raided the liquidity on the 5-minute time frame, took out the previous day high. So we came from below the midnight opening price. So a lot of bullish indications. And then if we look on the daily, we have this imbalance, which starts at 15,027, and the upper end of the imbalance is at 15,127. So it looks like that this is the draw on liquidity. It looks like the Nasdaq wants to move into this area to reprice this imbalance. And then we also have a one there, and then also the volume imbalance in between these two candles. That area right there. And then also if we look at this candlestick formation, these three candles, this is definitely printing a low, and this will be confirmed when this candle closes in 4 hours. So a low is defined by if you have higher lows on either side of the candle, which we have right here. So this is a low. So it seems likely we expand to the upside a little bit, potentially into this fair value gap and into the volume imbalance. Let's also get a Fibonacci from this last high. Quickly have a closer look at that high. So this was the very last high that we had before the drop down. So we have a high on this candle, a lower high right there, and a lower high right there. So we are gonna anchor our Fibonacci to that high. Want to quickly switch off the extensions, make the equilibrium a little more visible. All right, so if we look at the Fibonacci for this impulse leg to the downside, we have the equilibrium right at the volume imbalance. So there's a little bit of confluence that we could see price move towards that area. And then potentially back to the downside. We will have to see once we get there how we react with this level. Are we gonna displace through it or just kind of fade away once we get here? And then we could expect lower prices. But if we have a look at the Momentum Master B, we can see that the Williams wants to push to the upside, and it also looks like it's kind of printing a divergence. You have a low, and this low is slightly higher than that low, but on price action you have a low and a lower low, so that is a bullish divergence. Stochastics is oversold, starting to point to the upside, and then we have the RSI and the money flow pointing to the upside. I don't like the fact that the money flow is above the RSI. For if you are bullish, you want to see the money flow below the RSI and far away from it. But okay, there's more bullish signals on the Momentum Master B than bearish ones on the daily chart. Okay, so I think that's it for the daily chart. It looks like this area is the draw on liquidity. Okay, let's have a look at the 4 hour. Okay, so at least we are breaking into a bullish market structure on the 4 hour. And then we also have a pretty big imbalance right there. Let me get my path tool. Okay, so that was kind of the bearish market structure. And then this was the very last lower high. And now currently we are displacing above this. So I would like to see, once this candle closes and the next one forms, I would like to see an imbalance right here. All right, so let's also fill in this one. Okay, so now we kind of have to change the draw on liquidity a little bit. So we know we also have this fair value gap on the daily. And then if we go down one time frame to the 4 hour, we'll notice on this one, which is the daily, right? If we cross-reference this with the price action on the 4 hour, there's not really an imbalance right here. but there's one right here. So this tells me that this is a higher probability fair value gap. So let's remove that description right there, put it right there. All right, and then this, so the upper end of the fair value gap on the 4-hour will take you to the Fibonacci 618 for that impulse to the downside that we identified on the daily chart. Right, and then we also have some equal highs right there. We'll call that EQH. And that will be our buy side liquidity. I just want to see when these highs was formed. So these highs, okay, so this one was formed at 10 a.m. on a Monday. So that is a high liquidity high. This one was at 6 o'clock. So basically the overnight session. Okay, so we'll keep an eye on this level. This level is at 15,436. Another one right there, but we'll focus on these levels for now. Have a look at the momentum master. It's extended, but there's some bullish signals right here. You can see it's not showing a willingness to go down. And then we have the RSI and the money flow aggressively pointing up, with the money flow still below the RSI. So that tells us that we could still see another little push to the upside. And then the Williams is still pointing to the upside as well. So this could keep the stochastics pinned to the upside for a little bit while the Williams cycles up, and then they could come down together like this. Okay, so that's the 4-hour bullish market structure shift. Higher low, we're making that higher high. So it seems likely we expand into this area, and we know this fair value gap is going to be a high probability fair value gap because we have the gap overlapping with the one on the daily chart as well. So we will be keeping an eye on this one right here. Yeah, let's see what is going on the 1-hour. Okay, so on the 1-hour, this little move down also came into this imbalance, repriced in that area, then made the push to the upside. So the candle bodies respected this level. We just had some wicks through it. And then also right to that Fibonacci, the OTE, the 706, just poked through the Fibonacci golden pocket. All right, so now it's clear that we've broken into a bullish market structure. This is clear displacement above the high. Okay, so this block was just the one that I said I wanted to see a fair value gap on the 4-hour. Let's remove that. Okay, so imbalance right here on the 1-hour. You see price action came into it, and it's still in the upper quadrant of the fair value gap. So it looks like it can still expand to the upside from here. It's not really showing a willingness to go down. It doesn't look like it's going to come back into the discount. But if it does, there's a level right here I'm going to keep an eye on. So this will be the top of your bullish order block. call it OB. Okay, so the top of this order block is at 14,773. Also just want to see where that level is in relation to the Fib levels. So this is right there at the Fibonacci 618. So if we come back into this level, then for instance on the 1 or the 2 minute, we're going to be looking for displacement to the upside, and then we can enter long on a PD array in a discount for that small little impulse to the upside on the lower term time frame. Okay, so there's still some relative equal highs right here, so we can retrace, then come and attack the liquidity above these highs and that high right there, and then we'll move into that daily fair value gap and potentially to this one, which is a fair value gap on the daily and the 4 hour, and then it's also visible on the 1 hour. So I think if we get that push to the upside, it's gonna go past the fair value gap, this one on the daily, through the volume imbalance, and then towards this area, because this imbalance is now visible on the daily, the 4 hour and the 1 hour as well. Okay, momentum master B also showing indications of a little bit of a retrace. So all right, so let's see. It looks like the momentum master B is saying we could potentially see that move back into a discount towards the order block. You can see this looks pretty bearish. The money flow in the RSI pointing to the downside, and then the Williams is starting to get extended with the red bearish print. Also see what the light is saying. So this is still getting used to this one. This is a new indicator that Danny created. Have a look at the 15 minute. Looks like that 15 minute is starting to flip bearish. I noticed just before the stream we have the bearish cross on the 5 minute. Okay, so let's see if we can get a retrace into this area. Probably not the best idea to look for a long from this area, because this is obviously now in a premium and we need it to come back into a discount to consider a long position. Have a look at the 15. Okay, 15 also extended. Everything is basically extended. The normalized MACD is extended. The momentum is pushing down. The strength is pushing down. The money flow is above the RSI, and the RSI is pointing down as well. Okay, 15-minute chart. Okay, so we know the momentum master B is showing potential momentum to the downside, and then it looks like the baseline moving averages wants to cross bearish, and then price action is also far away from the trend cloud. So typically when that happens, price action comes back to the trend cloud, kisses it, and then potentially shifts back to the upside. Okay, so go to the 5 minute. Okay, so it looks like there's a potential short starting to print. I'm just going to remove the previous day high line. We know that we've dug into that liquidity pool. Just want to move the fib a little closer so I can see those levels on the 15 minute. Okay, so obviously now we've dug into the buy side liquidity. Also, we had a high right here. So potential buy stops above this high. Then they ran the buy stops above this high. Started to displace to the downside. Took out the very last higher low with the fair value gap right there in a premium. Also get a Fibonacci on this impulse move. Right, then we have the 786 right above the fair value gap and the Fibonacci 618 right at the lower end of the fair value gap. So if price action comes back into this area, the lower end of the fair value gap is at 14,915. The upper end is at 14,927. Okay, so if we come into this area, then I'm going to be shifting down to the 2 and the 1 minute. All right, so if we come up to this area, I'm going to be looking. The Optima works really great on the lower term time frames. So once we get in here, we make a high and a higher high. Then I want to see on the 1 minute or the 2 minute, I want to see a divergence right here. So when price action is making a high and a higher high on the divergence indicator, the momentum master Optima, I want to see a high and a lower high. So that's your bearish divergence. So that's going to tell me, okay, we could see a nice little reversal back down. Then we just wait for displacement below this low. Fair value gap in a premium for this leg down. Then we can short from there. And then because the order flow on the 15 minute and on the 1 hour is clearly bullish, we just play this towards the equilibrium right there to the 0.5 at 14,802. And let's just see the potential amount of points that we can make. So if we enter around there in the 5 minute fair value gap, play it towards the equilibrium, that's about 117 points. That's definitely something I'm going to be watching out for. For the afternoon session, the afternoon kill zone starts in 12 minutes. So that's when the most probable setups will start to form. And then the silver bullet starts in 42 minutes. Remember the rules for the silver bullet that we discussed yesterday. It's basically something similar to this. You want to see price action take out a high, so take out the buy stop, then displacement, which creates a bearish market structure shift, fair value gap, enter in the fair value gap, and then the idea is to TP at the next opposing liquidity pool. But if this setup plays out and we know the order flow is bullish on the 15 minute, then we are just going to play it towards the equilibrium, because we know there is a likelihood that price action can start to reverse back to the upside from the equilibrium level. All right, so there's the idea right there for the afternoon session. Let's have a look at the dollar index. Alrighty. Okay, something I only noticed this morning. Let me just clean up my chart a little bit. Okay, so we've been saying that the drawn liquidity for the dollar index is to the upside. When we were below these levels, we said that it's drawing towards the buy side liquidity above these highs. And then once we broke that and we saw that we aren't displacing to the downside but displacing to the upside, it was clear that excuse me, it was clear that it looks like they want to gravitate towards higher buy side liquidity, which will be above these highs at 107.195 And then we have a weekly buy side level at 107.993. And then also we have the imbalance on the weekly chart, this gray box. I believe there's also an untouched fair value gap on the daily chart, which is that one right there. Let's make that blue. Okay, so it looks like we are drawing towards that level. This daily imbalance starting at 108.440 and the upper end is at 109.452. All right, so we came up right to that level, and where did I get that level? That is simply just this bearish order block. So we have consecutive up close candles, then a move down that violates the low, confirming that is a bearish order block. Alright, so we came right to that level, got rejected. So maybe the dollar just wants to retrace back into a discount for this little impulse leg to the upside. We don't have any fair value gaps really in this area except for that small one right at the equilibrium. Okay, so I'm going to be watching for reversals from this level and the equilibrium. All right, so the dollar index, the analysis is pretty straightforward. The order flow on the daily is clearly bullish. It still looks like it is reaching for the liquidity to the upside. And then we have multiple imbalances on a higher term time frame as well. And then if we have a look at the momentum master, pretty big, looks like it needs to retrace. This momentum is getting extended. This also looks like a bearish divergence on the Williams. So a high and a lower high. And obviously on price action, we've been making higher highs. Alright, so it looks like the dollar is going to have to retrace back into a premium, into a discount before reaching for those higher levels. So definitely watching that fair value gap. And then also the 618 because we have that bullish order block right there. So look at the 4 hour. Okay, right now it's in an order block candle. See what happens. There's a little bit of an imbalance right there. So it looks like it's going to first come back to the upside to reprice and then potentially come back into a discount. You have some bearish order flow right there, and it looks like it is printing a little reversal candle to go back to that level before coming down again. Okay, momentum master is bearish on the 4 hour. We don't have a lot of momentum to the upside. The Williams needs to reset. Looks like a little bit of consolidation, then a move towards the imbalance, and then a move back down. 1 hour. Not really much. It looks like the 1 hour wants to make the push to the upside towards the imbalance as well. So this little push up is maybe what the Nasdaq needs to go and reprice those imbalances that we discussed during the course of the stream. All right, I think that is basically it for the dollar. Little move up to reprice the imbalance before coming down back into a discount on the daily chart, and then back to the upside to go and grab the liquidity at above 107.195 and 107.993. And then obviously we have that imbalance right there. And then on the daily chart, it looks like we are reaching for that level right there. Just reprice and then potentially back down, because it looks like on a higher term time frame, over a longer term period, it looks like the dollar is reaching for higher prices. All right, that's it for me, guys. Thank you everyone for tuning in today, and then I will be back tomorrow at around the same time, but I will keep you guys updated in the Discord. So thank you very much, and until next time.